Cool. Yeah, so here, for example, we're going to start off with, last session was the UK and Europe, so I'm going to start off with the UK. I'm going to come over to economics. And then this is yesterday's news. We already know what the Fed was saying, and that the Fed said that they were going to maintain those interest rates, but looking at the dot plot, they were expecting 2 rate cuts by the end of the year, targeting about half a basis points, which is just 0.5%. So right now, if we're sitting at 4.5%, then they're saying by the end of the year, we should be sitting around 4%. So you have that. And then, so that was for the central banks, or for the Federal Reserve. You can come over, you can take a look at Bank of England, because in London session, we had interest rates coming out from Bank of England as well, where they were maintaining the rates. We were expecting that by the end of the year, Bank of England should also continue cutting those interest rates. That's what the expectation was, given the data points. But here they held it at 4.25%. They also have a weakening job market and weak growth against a backdrop of mounting geopolitical tensions. Let's see, let's continue down. So opposite of what the Fed said in theirs, Bank of England is saying that, or actually let's take a step back. The Fed said that inflation is still ticking up, but it's not at a super fast pace. Labor market, it's also strengthening. They're seeing some more growth there. So they were giving us some optimism and sense of the dual mandate that they have, which is maximum employment and price stability. Price stability is just inflation. So having that under control. And then the next issue after that was the geopolitical tensions and the tariffs. So the biggest takeaway, even from CPI and PPI news when those were released, and even from yesterday's press conference, was that the consumers haven't experienced the full effects of the tariffs, and the tariff costs were also not passed down completely to the consumers from the producers' side just yet. But we are expecting that that's going to happen in the end of, or in the second half of this year. So that's why they were maintaining the rates, to see the full effect. So the chances are that as we're moving into the second half of this year, you're going to see those CPI data points ticking up even further. And that's why we're projecting 2 rate cuts now, and a total of 0.5%. There's a very high chance, maybe even going into the next meeting, when they initially start to see any of these effects, that they're going to still maintain those interest rates and still move into that contraction in monetary policy, where they're reducing their treasury holdings with, selling off their mortgage-backed securities and debt and all that stuff. So they can just hold it out for even longer and even get just 1 rate cut instead of 2, right? So that could happen there. Bank of England said, on the other hand, what the UK is struggling with is slowing growth for the remainder of the year, versus the US was saying that, okay, we're starting to see better growth here. And then even the labor market is starting to become weak, whereas the US is saying, or the Fed was saying, that we're starting to see growth in the labor market there. So that's why Bank of England is able to maintain those lower interest rates for that reason, because obviously inflation, if it starts to increase again, then any central bank will have to increase their interest rates as well. That has an inverse relationship. So anytime inflation increases, the Fed is going to increase their interest rates, or central bank in general is going to increase their interest rates as well to combat that. You can also combat that, if you're not ready to increase your interest rates again, through contractionary monetary policies as well. The worst case scenario for any central bank is to cut interest rates and then see that inflation is ticking back up again, and then having to increase interest rates again. They don't want to do that. That's why they'd rather just hold out and maintain whatever level that they're at, and not just cut further. Does that make sense?
Yes.
Perfect. So tariffs, rising prices stemming from the conflict between Iran and Israel. So Middle East geopolitical tensions that are going on. And then let's continue now if there's anything else. But those are the 2 main things that are affecting every nation at this point. So traders are slightly added to bets on further interest rate cuts, pricing another 2/4 point reductions in 2025. So that means that we're expecting to drop back down to, if they're sitting at 4.25%, then coming down to potentially 3.75 by the end of the year. Alright. So this is all stuff that we've already discussed in the weekly outlook and market update. So key takeaway for the US and for the UK still is that both the central banks, they're holding out those interest rates, and the key things that they're watching out for is the tariff effects, and obviously all these countries trying to cut a deal with Trump to remove the tariffs or at least reduce them. And then also you have the inflation problem all across the board, and also you have the geopolitical tensions that are affecting oil prices and also the inflation in general. So you got that from the US or from the UK. You're going to come over to Europe. Take a look at if there's any news over here for Bank of England or anything like that that can impact your currency, whatever currency that you're trading. Geopolitical tensions right here. Trump said that the US was not going to get involved. So, if the US does end up getting involved, then that's when we would expect to see movements in the market. Other than that, the market hasn't been super reactive to a lot of the Israel and Iran war or news coming out. So something like this, where if the US does end up, striking on Iran, especially over the weekend, then maybe even going into tomorrow, you might see gold and a lot of these safe haven assets pushing up bullish, and investors moving into more of a risk-off sentiment when it comes to the equities. See if there's anything else. Yeah, so about a week ago he was saying that they weren't going to get involved, so the president's openness towards a reversal from his public remarks a week ago. So you can take a look at that, hit economics, hit politics. This would come under the politics section. And then you can do the same thing in the Middle East, which we already have the news for that. So we have that from just the macro fundamentals. We understand, like, okay, it's the same key things from the weekly outlook, the market update from a couple of days ago. And then now looking at the economic data this week, we started off quite easy, and then interest rates kicked off in Asian session on Monday, where Bank of Japan also maintained their interest rates at 0.5%. Continued down, you had US retail sales, which dropped down. So we're sitting at a 0%. That doesn't mean that nothing was, like, there is no retail sales or anything like that. It just means that we're sitting at the same exact percentage from the month prior to that. And then they revised it, obviously. So then, May 15th, the actual came out to 0.1%. They revised it to that 0%. And then this shows you that it's actually dropping down. So the change in total value of sales at the retail level, excluding automobiles. So that drops down. That means that, less sales happening on a general level. Then you have retail sales, which also came back down at negative 0.9%. Same thing, showing the same picture. That's starting to slow down. Continue down, you had CPI coming out, and that is ticking up. So it's still lower than the previous. That just means that it's still increasing, but at this rate. So it's still increasing at that 3.4%. And then unemployment claims came out from the US, sitting at a ballpark area of even the previous and not too big of a change. Interest rates came out yesterday, sitting at 4.5%. And the main thing is that, by the end of the year, we should be seeing inflation prices being pushed over to the consumers because of the tariffs and all that stuff. So the consumers didn't see the full experience or the full inflationary pressures. Because of that kind of remained on the PPI side, on the producer side. I don't think any of us trades New Zealand dollar or Aussie, so we're not really going to take a look at that. And the interest rates coming out from Bank of England, we just went over that, maintaining it at 4.25%. And both of the Fed and Bank of England, they're expected to have 2 more rate cuts by the end of the year. Let's continue down in Asian session today, or pre-London session today. You have retail sales coming out from the UK. So expecting a drop, a slowdown in retail sales there as well. And then going to tomorrow, ending it off quite easy. So we've had a couple of trading sessions this week already. So we saw pretty good movement. But tomorrow we'll do another live trading session at around maybe 6:30, 7 o'clock PST, just to see how the week ends off. But then next week we're getting a lot of red folders, a lot of good data points coming out that we can trade, which is a lot of PMI starting on Monday. Continued down onto Tuesday, you have Powell and Bank of England Governor Bailey speaking. So we might see pretty good movement around that time too. And then Wednesday, same thing, Powell speaking, so you might get some movement in the markets around that time. Thursday, you got GDP, you got Governor Bailey, you got unemployment claims, durable good orders, all that stuff coming out. And then Friday, you're ending it off with core PCE price index. So you have pretty good fundamentals coming out next week as well that we can prepare for and get better movements. On the technical side now, when we're looking at, let's start off with the monthly. Price pushed up. We tapped out at the all-time high levels at almost 45,000 mark, let's just say that. And then price pulled back down. It seems like right now we're kind of respecting this monthly support area where we had those top wick rejections this month. So I'm going to mark that off, but obviously we're going to adjust that as we drop down to lower time frames. But that 42,500 mark, that is your monthly support. That price is rejecting at the moment. And then as it just keeps pushing back down, then we're just looking for a price to come back down first into the support, and then if it continues, then further down. You come onto the weekly time frame, you start to see a little bit of more consolidation formation here with these quick little fake outs. And in this zone overall, you see price breaks out of it, and then you get a nice break and retest, seller's pressure, come back down. And that liquidity grab that we saw on the monthly time frame, price pushes back up, and then last couple of weeks we're just consolidating out here. This week we finally got some momentum to just make a top wick and then start breaking some of these previous candle bottom wicks right here and see if we can continue pushing down. So the first area of target is really going to be down here if we can keep breaking our own low. So that would be, let's just call it 41,600. So that's your first target if price can keep breaking its own low and keep pushing back down. You come onto the daily time frame. Even on the daily, we've had consolidation to this area in the past before break and retest, push, comes right back into that area, taps into that consolidation support, and then you get that massive push back up. Price comes back, revisits that area, holding onto a support for almost from December 18, 2024 up until January 14th. 2025. So almost a couple of weeks, and then finally a push back up. Same thing here, price tries to just continue pushing back down, comes back, we're revisiting, kind of hanging around in this area, but it gives you a nice retest of that seller's pressure and then a continuation down. And then we entered back into this area May 12th, 2025, and we're still in it, so almost a month. We're kind of just hanging into this area. So we have a lot of zone-to-zone opportunities that we can take advantage of. So scalp opportunities, day trades, anything like that. As soon as price holds onto a resistance or holds onto a support, then we have movements that we can take advantage of. I'm going to remove this right here because as we drop down to lower time frames, now we're going to start to narrow in our zone. So you come onto the 4-hour time frame. We had that bullish momentum to the upside. We tapped out around, what's the highest point that we hit? 43,000 mark, and then comes back after consolidation, comes back down, a retest, pushes back down a little bit more, another retest, consolidation, and then around last Asian session up until now, we're just seeing these nice pushes back down. So at each of these points, if you wanted to see, why is price reacting at some of these levels. So even for the support, you just look to the left. You've had support here in the past, and price will react off of, previous levels here. And then same thing with this area of support. If you look to the left, price was holding onto a support here within that consolidation. If you look at where price is making a bottom wick at the moment, you go to the left and then you see how price has reacted here in the past too. So we know that once price breaks below this, you have a good scalp opportunity at the bare minimum to come here. And then if you see that volume of price just continuing back down, then you can target this area as your final TP. So this can turn into your partial, or you can look for a scaling opportunity below this. But essentially what we're seeing is that you have a bullish momentum here from April, and we're potentially kind of just testing this structure. So you've had price push up bullish from here, massive momentum to the upside. So that tells you that that's liquidity grab. Anytime you see volume after price taps into an area, rejects into an area, that's your liquidity, right? And then price comes back down, respects that previous area of that minor consolidation as support, pushes back up, and then we maintain in this nice bullish structure after that. We come back into these previous areas that we had discussed, which are key levels from the weekly and monthly, reject off of that, and now we're coming back and another potential test of structure into these previous areas. If price breaks below that, then you have longer term sell opportunities to come back and revisit into these areas further down here. Excuse me. Now for that to happen, and for you to look for longer term sell opportunities, you also need the fundamental support there. So let's say all the red folder data points that are coming out from the US come out showing us a negative picture that the economy is slowing down. Pretty much opposite of what Powell told us yesterday, that the labor market is still strong, inflation is ticking up, but still, controllable, all that kind of stuff. Instead, we see data points that's showing us a different picture. And then if there's also, truly of strikes happening over the weekend, then that's going to bring the investors into a risk-off sentiment, which is going to help you with that continued sell-off to the downside. If you come onto the hourly now, how do you take advantage of these short-term trades? Sorry, give me a moment. Alright, so now on the hourly time frame, you're waiting for a clear support to be formed and then a continuation back up. Just so we're not super confused, I'm going to remove these. And then we're going to create zones here. So looking at the current price action, where price is pushing back up from, what you're going to do is mark up a zone, which is all that consolidation. That's your support. That's the area that price held onto a support in right now, right? So we have a bullish candle closure here on the hourly time frame. This new hourly candle just started forming. As price breaks the high, then you're looking for buying opportunities to come back up into this area. So if I mark off that zone and then we just extend it over to the left, we're going to check out to see what is price doing here. So I zoom out and then I look to the left, and that's the consolidation resistance, right? And then you can just continue zooming out to see how many times price has tapped into it. If you see multiple touch points in a level and then you see reactions after that, what do I mean by reactions? Price held onto a support here and then you see a nice push, right? So that tells you that that's a very strong level. And then we're looking for a buy here when this high is broken. You're looking for a buy to come back up here. And can that potentially just be a new lower high that price is making? So after price consolidated, it started the short-term bearish trend, right? To come back down into this area. That's how we were able to get here, because you started that short-term bearish trend. And then we started to see these lower lows and lower highs being formed. So after this massive consolidation, price broke out of it, pushed back down, created a low, comes back, retests into that area. We push back down, create a new low, come back, retest into that area, and then we had that seller's pressure to the downside, creating a new low, right? Of course, you have retest into these areas along the way, which is giving you the volume to keep pushing down. So now, can we simply see a retest into this, or even going into tomorrow, are we seeing a setup to continue? Because today is a bank holiday, US federal holiday, there's a very high chance you're going to end up consolidating out here. So that's why we're not looking for trades today. We're just going to practice on the simulation session to see our potential setups. Make sense?
Yes.
Perfect. Now let's go over to GJ. So we already know the fundamentals, but if you guys have any questions about that, let me know. We just went over it. Now looking at the monthly. So now when you look at monthly for GJ right off the bat, you see consolidation, right? But still, you can take trades here. And now it's a matter of understanding what are your higher time frame levels. So when price approaches a monthly resistance or a weekly resistance or a monthly support or a weekly support, we're not looking for 15-minute break and then a push, right? We understand that these are higher time frame levels, so they are very strong levels as well. So we're going to respect that. When price approaches these levels, we're either looking to exit our trade or we're waiting for a proper break and retest above or below these areas. Then the confirmation should come from hourly, 4-hour time frame, daily, all that stuff. And then you're looking for your continued trade from there, or even a scale and opportunity, either of those. But now looking at the monthly resistance and the support, it's pretty clear that this is a massive consolidation area that price has been sitting in. And we entered that in July of last year, and we're still in it, right? So that's your massive zone, and what you're going to do now as you drop down to lower time frames is really narrow in within that range. So on my monthly, if this is my resistance and this is my support, my weekly, daily, 4-hour, and all that should be within this range, right? Sometimes what people will do is they'll mark off these levels on the monthly and then their weekly levels, because now you see price breaking out of it, they'll mark up a weekly support. You can only get to the weekly support after you break the monthly support. So you have to first mark up the weekly levels within the range. So you have to break out of this range before you can continue outside of it. So now when you come onto the weekly time frame, I'm just going to use the same line to adjust it. You're going to mark off the current weekly's bottom wick rejection. You break that, then you're headed into the next support areas, right? So now we know that for this week, this is our range, which is going to be your 194 area. I just put whole numbers just so it's a lot more clear to talk about, a lot more clear to remember as well. Coming on to the daily time frame. So even here, when we're looking at the overall structure, we're seeing that the bullish volume starts to die down a bit, where we're not able to break the previous highs. But overall, we're still maintaining a strong support into this entire area. So price comes back, taps into it, nice push, taps into it, nice push. We came back, revisited that area back in April 2025 with a bottom wick rejection and then a nice push, which helped us get back into that 196.800 area that price has been rejecting for quite some time. So on the daily, we had that bottom wick and now price is starting to push back up. We have a support area, so that's what I'm going to mark off here. As long as price is above that, we're still going to look for continued buys, because based on the daily, it's clean price action to the upside. So this is going to be your 195.3. And as price pushes, you look for your buys. You can mark off these minor areas right here, which is, I'm looking for a basically established support, push back up. That's my first area of target, my partial, any of that good stuff, and then a continuation up from there, and that should be my risk-free trade up top. If price rejects this and then pushes back down and there's a clear resistance here on the 4-hour and 1-hour, then I'm looking for sales to come back down into 195.3, and then if it continues bearish from there, then this is going to be my final TP. But I have a lot more room here compared to that, so that means that I can even look for a scaling opportunity. I come onto the 4-hour time frame, strong resistance. As you can see, price keeps rejecting it. We push back down. We reject into 194, and then finally we get the volume to come back and tap into 196.8. And then a straight sell opportunity coming back down into 194. And then a continuation back up into this area after a strong support that was being formed here in Asian session yesterday. So after that, it's been straight bullish volume. We're rejecting into that 196 zone, and then the current 4-hour makes a bottom wick, so that means that as we drop down to 1 hour 30 minute, there should be support formation here. As price is continuing, you test its volume. The way you do that is, let's say price made a top wick. If it can continue breaking its own top wick and inches up more, then you know that there's bullish volume and you can take advantage of buy opportunities to come back and tap into this area. So that support that we're talking about, pretty clear here on the hourly time frame. You got that support. This new 1 hour candle just started forming about 9 minutes ago, and so it's already breaking the highs and pushing back up. If you're unsure of, do I start taking trades right off the bat, just look to the left and see if there's any messy price action. What that means is a lot of wick rejections, a lot of consolidation, any of that stuff. So we can see that here a little bit already. So if you're unsure of do I take an entry now, you wait for this area here to be cleared, which is that consolidation resistance, and that quick fake out for that area of price right up there, and then break and retest test, and then a continuation down. If price breaks above that, then you have an opportunity for about starting off for a wick fill of 18, continuation for 24, and then at that point take some partials. If you see continued volume where price just keeps pushing, you can turn that into a 46 pip trade. And then since we have already bounced off of that 194 area, we're clearly not ready to continue back down bearish. We don't have a lot of volume right off the bat. Our fundamentals are just going to give us a straight push out of that 196.8. So you can take a scalp that turns from 24, 42 to almost 100 pip, and at that point, if you want to look for scaling opportunities, let's say going into Asian, you can do that too. Once again, right now it is a US bank holiday, so you're probably going to see very little volume in the market. Coming on to 30, same thing, established support, price is pushing, and then you're just waiting for a break and retest setup here, or you wait for a candle closure above this area in the next 20 minutes, so right above that area, and the next one gives you a bottom wick and pushes back up, and that's your buying opportunity to the upside, which is going to give you the confirmation of price is not going to reject this and come back down. So if you take an entry right now, you don't have the confirmation that price will have enough volume to close above this minor zone that we have marked up because of this consolidation resistance and all that stuff to the left. So just wait for candle closures, and then you'll have better entries then. Daniel, we just went over US30, so then you'll have an opportunity to go back and watch that as well. All right, so now when you're looking at USD, JPY, same thing. You start off with the monthly. We're gonna mark up the current monthly support, which is right around here, and then you have some fake outs and all that stuff before price pushes back up, but I'm just marking off an area on average this is where price is rejecting, right? So you have that, which is your 143 level. Current monthly is also super bullish. You don't barely see a top wick rejection here at all, so price just keeps pushing. So what you can do is mark off the next monthlies or the previous monthly's top wick rejection, which is sitting very nicely on that previous resistance, kind of cutting through this little fake out before push back up. That's just a new high that was formed before price pushed back down and then got that volume to create a new higher high. So that's your 148.7. You come on to the weekly, quite similar to GJ, price is sitting in this consolidation here once again. So that was right around here, that consolidation, which we got into April of 2025 and we're still in it, so a couple of months, still kind of hanging around this area. What you can do is also mark off the resistance of that. So I'm just going to bring that up because obviously before we head up to that wick rejection, we need to clear our own resistance areas here first. So what I'm going to do is mark off that top wick rejection, which is that candle body open for this bearish candle, 146.3. So that's where we're headed next. If we're only looking at the pip range, we have a pretty good pip range to take advantage of when it comes to any scalps, potential day trades, because this pair does move pretty slow. So around 50 pips, 52 pips. So we still have a pretty good range here. Come onto the daily. On that daily, a ton of consolidation right into this area. And then we finally had a break above that on the 17th. You got a retest right here. And then this one made a bottom wick and then flipped back up, breaking the previous high. So we know that we have bullish volume. And then you can look for those buying opportunities to continue to the upside. You come onto the 4-hour time frame. After rejecting into these areas, maintaining those potential higher lows, breaking those previous highs, creating new higher highs, price retraced back down, held onto a support. That's your break and retest setup, and it just keeps pushing. So the current 4-hour candle It hasn't broken the previous highs here just yet. So that's where you need to be careful prior to an entry to make sure that you're not getting stuck in a trade that's going to come back and maybe even reject into this area once again if it doesn't have enough volume to continue pushing. For that, you come onto the hourly time frame. You mark off a minor resistance area here, and you don't look for a buy opportunity until price can break past that if it doesn't retrace. So there's two scenarios that we're looking at. The first thing is that price consolidates here and then it keeps pushing after this. If it breaks these highs, you take that entry to the upside, place your stop loss kind of below that zone. If that doesn't happen and price kind of just exhausts out here, which is a pretty high chance for today, what you can see going into Asian session is maybe another pullback down into these areas between around 145.4 and 145, let's say flat, somewhere around this area, and then a rejection back up. When that happens, you wait for an established support and then a continuation back up. Same thing. You wait for a bearish candle, a bullish candle, and then another bearish candle and bullish candle and a continuation back up, and you're waiting for the high to be broken. So let's say something like this, where price retraces back down, you got an established support, price pushes back up, and then as the high is broken, you take that entry to the upside. Or even something like this, right? Where that's broken by this candle and then a continuation back up, and you take that trade. So you have those two setups that you can see going into Asian session or even tomorrow's New York session. And then we're going to end off with gold, and then we'll move into the simulation session. I'll start another live for that just so this one isn't super long. We'll just keep this one for the market update. Looking at gold, tapping into all-time high levels. So that's going to be your $34.53.8. This current monthly didn't even try going bearish. As you can see, barely a bottom wick rejection. So I'm just going to mark it off at the current candle body open, which is down here. If price breaks below that, then we know that this monthly candle is going to be bearish. You come onto the weekly time frame. You see a ton of consolidation here, so if you want, you can adjust your levels here too. What I'm going to do, instead of bringing it further down, I'm going to look at what level needs to be broken right now before price can continue pushing back down. So that would be this consolidation resistance and the current weekly's bottom wick rejection, which is 33.49.2. So if price breaks below that, then we can target, previous support areas and continuation down from there. Come onto the daily time frame. So here, all that consolidation, we finally break past that, come back, reject into these previous areas, which is around that 34.53 area, and then push back down. On the daily, you had this weak doji bullish candle, and then the following candle barely broke the previous low, kind of came back, but still had a lot of bearish volume. Today we made a nice top wick, came back, rejected into this area, and we're kind of pulling back up. So that tells me that we don't have a lot of volume in this candle just yet, which obviously pairs up with the fact that we're waiting on the macro fundamentals, and we also have a holiday in New York session. So coming onto the 4-hour time frame, what I'm going to do is mark off the current 4-hour candle's bottom wick rejection. I don't have sells, even scalp opportunities, unless price can break below 33.61.9, and then I can look for quick scalps to come back and fill this wick. If there's enough bearish volume, I can then extend my trade to come back down and tap into this next wick rejection here. If price holds on to a support and then pushes back up, then I'm waiting for the 4-hour highs here to be broken and then continuation back up. Now, because of this setup, there's so many consolidation, I'm looking for what's the safest bet. And what's the safest area? If price clears this, then I know for a fact that price can just keep pushing. Here, it's going to be that. So within this, a ton of consolidation, right? And then if price breaks above that, then I know that I can look for quick scalp opportunities to come back and tap into this consolidation resistance. And then if there's continued bullish volume, let's say there is more market fear over the weekend, there are actual strikes that are happening, US gets involved, all that stuff, gold is going to push up, and we're going to look for those continued buying opportunities when the market opens up, Sunday, California time, or, Monday session for everybody else. And then continuation. Anything in between, I'm not looking for a trade in. And then when you come into the hourly time frame, you have, even within this consolidation, you have those lower lows and lower highs being formed. We finally break below it, retest, come back, create a new low. It seems like a retest, and we're kind of just hanging into this area right now. So no point of just taking the trade right now in today's session. Wait for Asian or wait for New York, and you also have a ton of fundamentals coming out next week. So that's it for the market update. I'm going to start a new live here in just 5 minutes, and we'll continue with the simulation session just so this market update isn't super long. So I'll see you guys shortly.